Hello and welcome to today's Market Matters video update. I'm Harry Watt, joined by James Garish. It is the 8th of March today, through reporting period, so we're going to touch on that in February. We've also got some numbers in the bank for the Market Matters portfolios. We're going to touch on some ideas going forward, what we like here and now, James. But kicking things off, February Market Matters portfolios, how do we stack up through that reporting period?
It was certainly a busy period. We put a lot of content out through Market Matters during that time. We looked at a lot of companies. We met with a lot of them, and we provided our insight into how those companies performed during reporting and what our take was on those. So I hope you found that really beneficial through that period. Happy to say the Market Matters portfolios, by and large, did well during February. The active growth put on 1.65% for the month. The ASX 200 accumulation index was up 0.79. So about 90 basis points worth of outperformance in terms of the active growth portfolio. That's, of course, our flagship portfolio that we publish on the Market Matters website. In terms of the income portfolio, not as well. That was down 1.3%. For the month. It's got a RBA cash plus 4% benchmark, so we well and truly underperformed that. A couple of stock-specific issues in that portfolio, but the longer-term performance still stacks up. So I'd draw your attention to the longer-term numbers there when you have a weak month. The emerging companies put on 3.69% for the month. That portfolio is going well in recent times. International equities put on 2.82%. And our core ETF put on 1.16%. That's a newer sort of portfolio for the Market Matters website. So obviously the portfolios, by and large, did well in what was a pretty hectic month for equities, Harry.
It's one of the busiest months of the year. You stack that up, reporting period is always a busy time. We headed into February basically at all-time highs for the ASX 200. We've come out the back of it almost at all-time highs. At the end of Feb, we pushed through that early March there. So expectations were pretty bullish heading into that reporting period, James. And how did we sort of see the market react to some of those names? What sort of sectors would you call out that did well?
Yeah, if I tie into how our positioning was ahead of reporting, we'd taken the decision to sort of increase a bit of cash in portfolios. We thought some flexibility would be important during that time period. Ultimately, we've reduced that cash as reporting season played out, and we got more confident in the outlook. Overall, I know the market was expecting, I guess, a reasonable amount from this reporting season. As you made mention of, it was near all-time highs going into it. But analysts' expectations were, I wouldn't say they were hugely optimistic. So we have seen more beats and misses by a good margin. That implies that reporting was better than expected. We have seen some incremental earnings downgrade. So before reporting, EPS for the market was expected to decline 4.5% in FY24. It's now expected to decline 5.5%, but that is all about energy, a decline in energy prices and their associated earnings. The rest of the market has done very well, and some sectors have done phenomenally well in the last month. So I'd say it was strong reporting, and I got a lot more confident in how companies are managing the cost base of their businesses. Margins are doing good things. Top line is still a bit of a struggle, but they're managing costs well. Inflation's less of an issue. And the other thing I'd say there about reporting is looking at the US. The US reporting was phenomenal, obviously led by big tech, but that's just not. It doesn't stop just at big tech. The rest of the market over in the US was really strong. EPS coming out of the US is like up 8% when the market was thinking EPS would be up about 1.5%. So really good backdrop both here and over in the US, Harry.
Yeah, so pretty strong earnings period. Like you said, we've come out of reporting period with a bit less cash in the portfolio. So we're going to touch on a few of the stocks that we've topped up and added to our portfolios, James. So kicking things off, we're going to touch on a large cap, a small cap, an income, and an international stock as well. But kicking things off with our large cap pick, our growth end of the spectrum pick from the ASX 200, James.
Really briefly. So we bought Corporate Travel this week, CTD. Stinker of a result we wrote at the time of they reported. We had management in after the result. The stock obviously fell a long way on the result. We think they've got a credible path to 10% top line growth, 15% earnings growth over the next couple of years. So CTD is the stock that I'll highlight here and now, Harry. We think it looks good.
The income stock, James, APA Group is one we've had for a little while in that portfolio. It's been a touch weaker though, but some comments on that.
Yeah, it hasn't been a great performer for us yet. So this is about to turn. I think APA Group loves lower interest rates, hates higher interest rates. We've written before around the typical spread that it trades at, the 10-year bond yields. Normally at 2.8, it got down to about, it was below 2. It's now back at 3.2% over 10-year bond yields. Price that off bond yields, rates fall, APA goes up by APA Group.
Pretty simple analysis there.
There's a bit more that goes into it, but that's basically the crux of it, Harry.
Yeah, that's the main driver for sure. The smaller end.
What have you got for us?
Well, Chrysos C79 is the ticker. It's the stock we bought this week. Really interesting company. I sort of put it in a sort of similar vein to Silex. It's a technology company that dovetails on the back of the materials sort of sector. So Chrysos, they have some machines that go onto gold sites and they assess the drilling numbers that come out of those gold sites. Normally speaking, the gold companies would have to send those off for testing. That testing's slow and actually quite poor in terms of quality. So having this on-site, having a cheaper option on-site makes a lot of sense. They've got 25 units out there at the moment. There's a real massive opportunity there to take that to about 150, I think, in the longer term. They've got a good deal with Barrick as well, which will be pretty key. But it's pulled back post a pretty soft quarter. They had some issues in terms of getting units on site, but I think that will turn and this company will do better going forward and see continued revenue growth from here.
All right, so about a $500 million market cap. C79 is our small cap pick that we've added to the emerging companies portfolio this week. I'll end on international equities. First Solar, there's out of, I think we've got 18 positions in the international equities portfolio. We're down on 3. First Solar is one of them. FSLR is the ticker for this. Basically, it makes high-tech solar panels for commercial use. A bit of volatility in the share price, ran up, pulled back. We bought it a little bit early. Their result about 2 weeks ago was strong, I thought, and the guidance was strong. So we're backing this one to improve from here. So First Solar would be our top pick here and there in the international equities portfolio. Harry.
All right, well, that's a wrap for today. We've gotten through performance. We've gone through a number of stocks to go and have a look at that we're very interested at the moment. So I hope you've taken something away from that.
But all the portfolios, I mean, go and look at all the portfolios, active tabs on the portfolio screen. I mean, we're still very keen to buy that particular stock here and now. So that is a key indicator to look for on the site.
Yeah, plenty to look for in that site, plenty to take out of it. We got questions coming through thick and fast as well. So that's going to be this weekend's report. But go and have a look at that. And any questions, put it through the Market Matters pipeline.